How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So today we're going to be talking about SNDL, Sundial Growers, which had a strong performance inside the market today. But before we actually get into it, of course, we got to go over an agenda. If you're new to this channel, I just want to let you know we have timestamps down below in the description. But if you are a shareholder or you're considering to take a position in this stock, I suggest you watch the entire video. So the first thing we're going to be going over is an article talking about the upside that is SNDL. Yes, this is not the same Sundial Growers that we were used to in the past. This is a different company. We went over the earnings. It looked fairly solid looking at the EBITDA, but again, we're going to go into details with the article. It does a great job going further into the background, and of course, I'll give you guys my analysis after it's done. Then we're going to be going into a technical analysis, taking a look at the price action. The reason why I do this, I do not want you guys to overpay. Whether you're adding to your current position, trying to bring your average cost down, or you're thinking about a new position, I feel it's key to know what price you should be paying. We also go over the resistance levels, also known in some cases as psychological levels, because this will tell us when it passes these particular areas, how we can look forward to when it comes to a run-up. And then when all of that is done, I'll be giving you guys my final thoughts. Do keep in mind I will be doing another video over the weekend giving you guys the updated information on Fintel. So let's get into it. So we're going to be going over this article that came out recently today for Sundial Growers. So let's get into it. So Sundial Growers stock is a cannabis turnaround play with plenty of upside. Buy the speculative SNDL stock on a dip as it heads debt-free into bigger opportunities. SNDL stock has been quite the volatile ride for investors. Fueled by retail trading frenzy, SNDL stock reached a high of close to $4 in mid-February. After reaching those lofty levels, the stock fell to 72 cents a share due to the largely risk-off sentiment in the market. However, I still believe the cannabis industry holds plenty of potential, and Sundial is an interesting company to watch as it radically transformed its business. Starting last year, Sundial began taking the necessary steps to fundamentally change how it operates. Early 2020 found the company in serious financial straits. Management had renegotiated with its lenders to amend a loan agreement. Using a combination of asset dispositions, equity and equity-linked issuances, and debt for equity conversions, Sundial was able to raise enough cash to quickly pay off its debt. So before we move on further, these are definitely some great things to know about SNDL. They're one of the few cannabis stocks out there, I should say companies, that are debt free, and they also have a lot of cash on hand. Due to the fact we did see them get to the 70-cent level, and I was talking about, hey, if you believe in the long-term prospects, this is a great area to add. So let's continue. Capital raises highlight SNDL stock dilution concerns. Since the company has undertaken an array of consecutive successful capital raising activities to further strengthen its cash position, in Q4 2020, Sundial raised $161 million by selling shares of SNDL stock and exercising warrants. In early 2021, the company issued a whopping 741 million additional common shares, receiving 695 million in proceeds. At the end of Q1 2021, the company issued 97.7 million worth of shares and filed for an additional 800 million at the market offering. While dilution in the original core Sundial business is a concern, the successful equity raises means that Sundial now is an entirely new business. As of May 2021, Sundial has cash and liquid assets on hand of about 752.7 million. Credit to the company's management team and CFO for navigating this difficult time. Sundial is now in an enviable position in the Canadian cannabis industry, as it is now one of the only debt-free players. The company can now focus on acquiring assets at attractive prices. Massive opportunity for cheaper investments. There is currently an oversupply situation in the Canadian cannabis industry. Last October, Canada had amassed a mind-boggling 1 billion grams of cannabis inventory. This is leading supply suppliers to significantly discount their inventory as dried flower loses its value over time. This situation will eventually lead to bankruptcies and facility closures of the weaker players. In the short term, the state of the Canadian cannabis industry may seem dire, the long-term prospects still remain. The issue was that post-legalization growers overestimated the initial demand for cannabis. However, this is a great opportunity for Sundial as it is able to make strategic investments for much lower prices. Sundial has started deploying its capital in high-quality investments. The company had invested $22 million through a mix of debt and equity instruments in Indiva, an edibles company. The company also invested $188 million in a joint venture with the private equity firm SAF Group. The joint venture will look for investment opportunities in the cannabis industry by leveraging SAF's expertise. In May, the company announced that it increased its stake in the Valence company to about 10.1%. So far, the company's efforts have been bearing fruit as it announced $2.8 million of interest and fee revenue and $12.9 million in realized and unrealized gains from its stock investments. Sundial's most promising acquisition is Inner Spirit Holdings for $131 million. Inner Spirit has 86 stores operating under the Spirit Leaf brand. Inner Spirit served 2.3 million guests in 2020 and has about 250,000 members in its loyalty program. Sundial will be able to strengthen its retail network with this acquisition. Furthermore, the company aims to achieve significant operational synergies and economies of scale, which will be crucial to competing in the industry. Investor takeaway. After the massive share price decline, Sundial is now one of the cheapest investments in the cannabis industry. The company has cash and liquid assets of $752.7 million with no debt compared to the current market capitalization of $1.57 billion. This means that investors are getting Sundial's brands and retail network at a substantial discount. So just taking a look at everything that we just went over, Sundial does offer a good amount of upside, especially when we were talking about it in the 70-cent range. I know it did end up going on quite the run, but hey, you want to be looking out for those pullbacks. But again, maybe you might have a higher cost average, then there might be some opportunities to look at as far as bringing your costs down. But for the most part, things are looking good for SNDL, and it is a completely brand new business due to the fact that they have a lot of capital and they're making the right investments, which has definitely been reflected on their balance sheet when they did their earnings, because we saw an improved EBITDA. So what this means is, as far as for future earning reports, we want to see continuous improvements, and I know that will have an impact on the stock price over time. So we're going to be doing a technical analysis for SNDL Sundial growers. Let's see how it performed on the day. So it ended up closing at 97 cents, being up 14.79% on the day. On the low, it tested 86 cents, and then on the high, testing $1.04. So the first thing we want to take a look at is seeing how well it's lining up with our indicators. So it is well above the 200-day, it is above the 100-day, and it's also above the 21-day EMA. So it's definitely looking bullish here. Even if we take a look at the RSI down below, it is definitely in that overbought territory, being well above 70. So keeping all of this in mind, I would be looking out for pullbacks if I was going to be adding to a position here. It did test 86 cents, so there's no doubt in my mind it should be able to test that area again come sometime next week. As far as loading areas, I would be loading the boat right here around this 66, 65 cent area, also anywhere in this 70 area, and also taking a small minor position in this 80 cent area. The reason being is we already know this stock does come with a lot of volatility. Another thing we got to take into consideration of the fact this $1 area, not only is it a psychological level, it is a resistance level. So Sundial has been able to be comfortable above that $1 range for quite a bit, as you can see previously. But at the same time, it's going to take a lot of volume and a lot of buying pressure for it to actually build support above this particular level. That's why I say look out for those pullbacks when they present themselves. Another thing also to understand of the fact, there's also a lot of volume in this play. You could see even on the day, it was at 619.5 million. So whenever you see it in these particular areas in regards to volume, and if you see it going up even higher on a particular day, then there's more likely likely more room for upside in regards to price action. So that's one thing I want you to be aware of. When we first even talked about it, it was well in this 70-cent area. So I know many of you who do swing trades or momentum trades definitely had an opportunity to enjoy a 30% gain here. So that's what I wanted to share with you guys, and look forward to see what happens next week. So for my final thoughts for SNDL Sundial growers, I'm definitely looking forward to see how well this stock does. One of the reasons being is we already know if you're planning to hold Sundial for another year to 2 to 3 years, there's a lot of upside here, especially since a lot of the capital that they have raised, they've been doing a solid job making the right investment and taking advantage of opportunities. We do know for a fact they have a lot of cash on hand currently, where we can look forward to seeing some more deals even into the future. We also do know of the fact that they did show some successes on their most recent earnings report. Seeing that improvement in EBITDA, I want to see that continue over consistent reports. And if it does, then definitely this stock has more room to actually move to the upside. Another thing we need to understand on the fact is their overall debt. They do not have any debt whatsoever. So this puts them ahead of a lot of other cannabis players, especially as we see that's going down in the Canadian market. So the fact that this is happening, I feel like the opportunity for SNDL is definitely endless if you're looking at it from the long-term prospects here. As far as where the price is, I do feel it is a little bit pricey, and considering this is a stock that comes with a lot of volatility, there's no doubt in my mind there's definitely going to be pullbacks in this stock. So I feel like there shouldn't be any rush to get in, even though it did have a strong day today. Of course, I may be wrong on that, but like I am saying, I do not want you guys overpaying for stocks. It really hurts me when I hear about some of the some situations that people have gone through in regards to buying stocks at high prices and then selling them and then going at a loss. Like I said, the stock market is a place where you make money, not lose money. And even if you do lose money, you want to make sure you have the right risk management in place and making sure that you're not buying at all-time highs. Also, before I conclude this video, like I said previously, I will be doing another video with the updated information from Fintel with you guys, and also I'll be adding a little bit more in there because I want to make sure you guys are updated so you can make the right decisions. And of course, I am not a financial advisor, so only get into this position if you are considering it and you've done your homework and your due diligence. Hope you guys enjoyed this video.